Tom's calling from Texas.
Yes, I have a question about IRAs, required minimum distributions, and qualified charitable distributions.
Okay.
I have an IRA. I'm turned 72 this year, so I have an IRA at the bank. There's no basis in it. So I'll take my first RMD this year, and I would like to maybe do a qualified charitable distribution as part of that.
Okay.
Okay, my question is, how will it show up on my 1099-R, or will it on the qualified charitable distribution? And will that count as part of my gross income or not in determining if I even have to file an income tax report? I'm single, so the threshold there is $14,250.
Required minimum distribution is the government telling you a minimum of how much you have to take out this year. That RMD has to be met by taking the money out in some way, whether you're doing it with your giving, that's called a qualified charitable distribution, or whether you're just taking the money into your own bank account, or whether you're moving securities into an investment account. Your 1099 will report all distributions, and you want that to happen because you want the government to know that you met your RMD, because there's a 50% penalty for money that you were supposed to take out as an RMD and did not do. So you want the full amount reported. Now, in order to make sure that you get the money out at the 0% tax rate and that it doesn't count as income, it's on around line 4. It says how much was taken out. You put your 1099 amount there, and then it says how much is taxable. That goes all the way over into the total, adding up your income. So it's your responsibility to make sure that the qualified charitable distribution was done correctly, which means that it was sent directly from the IRA to a 501c3 organization. And you need to keep the documentation on file. You don't have to turn it in unless you get audited, but you need to keep that. It usually comes in the form of a letter from your brokerage company on where it went and who it was distributed to. And then you're going to put the taxable amount in that box on your tax return so that you don't have to pay taxes on it. So I hope that answers your question. And it's a really great way to get money out of an IRA without paying taxes. That's the way that you win with qualified money, is to get the money out at the lowest rate possible. So we talk about that a lot on the show. There's a lot of great videos. If you're a partner, you can go and find more information about that.